Okay, let's just dive right into this explainer. We're going to unpack this massive, honestly fundamental shift happening in the business world right now. And it all stems from this wildly ambitious prediction by Sam Altman. So, according to our source material, Altman actually has this group chat with his tech CEO buddies, right? And a few years ago, they started throwing around an idea that at the time sounded like pure science fiction.
They literally started a betting pool on this exact question. When is the first one-person billion-dollar company going to exist? Sam Altman's take was that, well, it'd be impossible without AI, but with AI, it is inevitably going to happen. Now, when that prediction first leaked out around 2024, almost nobody took it seriously. But as we're going to see today, the reality is the timeline for this staggering milestone is drastically shrinking right in front of us. The tools making this possible, they aren't locked away in some secret lab anymore. They're available to everyone, literally today. But to really grasp why this prediction is already coming true, we kind of have to look back at what exactly changed.
See, historically, massive valuations with tiny teams were totally dismissed as anomalies. Think back to 2012. Facebook bought Instagram for $1 billion. Instagram had just 13 employees. Then 2 years later, they bought WhatsApp for $19 billion. WhatsApp had 55 employees serving 450 million users. It's insane. But the industry treated these like viral accidents, like once-in-a-decade flukes of perfect timing. The old assumption held absolutely firm. If you want to build a big company, you need a big team. Need marketing? Hire a marketer. Customer support? Build a whole team. Every new function meant bringing on new people, burning through your runway, giving away equity, and just piling on management overhead. For most of startup history, the ultimate bottleneck wasn't having a good idea, it was the execution.
Section 1. The end of execution. Okay, so before 2025, AI coding tools, like GitHub Copilot, they were basically just a smarter version of spell check for code. You, the founder or the developer, were still writing it, the tool just kind of helped you finish your sentences. But early 2025 completely flipped the script with the launch of Anthropic's Claude Code. This was a massive shift. Coding officially got delegated. The founder is no longer the one typing out the code. The founder is the one directing the AI.
Let's look at exactly how this plays out, because it's a real game changer. Instead of a non-technical founder having an idea, scrambling to find a developer, trying to explain the problem, and then waiting weeks or months for it to finally get prioritized and fixed, they can now just direct this entire compressed cycle themselves. You just describe what you want in plain English. That's it. The AI reads the files, figures out what needs to change, makes the edits, runs the tests, and get this, if it makes a mistake, it actually helps you find it and fix it itself. Momentum literally never stalls. Decisions aren't bottlenecked by whoever holds the technical keys anymore. So for founders who previously had zero path into product development without a dedicated engineering team, their speed is now just unprecedented.
All right, Section 2, the AI startup math.
Looking at the solo level, we have Danny Postma. He built Headshot Pro entirely by himself. No co-founder, no engineering hire, not even a traditional engineering background for himself. He crossed $100,000 in early revenue relying totally on AI tools to handle the product side and SEO to handle discovery. His publicly documented team size is exactly 1. And what's absolutely crucial to understand here is that Danny isn't just some outlier who got incredibly lucky. He understood the AI stack, he built with it from day one, and he made a highly intentional choice to never hire around the parts that those tools could handle.
So what happens when you take that exact same logic and apply it to a company building at an actual massive scale? Well, look at Gamma. It's an AI-powered presentation tool. In November 2025, they announced a $2.1 billion valuation and $100 million in annual revenue. Their team size, roughly 50 people. If you do the math on that, that is a staggering $2 million in revenue per employee. A traditional software company at that same $100 million revenue mark, they usually need somewhere between 200 to 400 people. Gamma is pulling off the exact same scale with a fraction of the headcount, purely because they built AI into their DNA right from the start.
And we're seeing this pattern replicate all across the industry. Even project management tools like Linear are hitting $1.25 billion valuations with just about 100 people. Now sure, 100 people obviously isn't a solo operation, but for a company valued at over $1 billion, operating with a team that small would have been completely unthinkable just 5 years ago. These companies aren't just exceptions to the old rules, they're literally writing the new ones. The new playbook is basically, keep your team super small, rely heavily on AI execution, and watch your revenue per person stay astonishingly high as you grow.
But okay, there is this silent operational gap that almost nobody talks about until it turns into a massive crisis, the money side. When you're the only person in the company, things like catching rogue costs before they spiral out of control or tracking your margins, those tasks don't magically disappear. They just don't have anyone assigned to them.
Most solo founders are out here tracking this stuff in a messy spreadsheet. To bridge that gap, automated tools like Row are stepping in. They automate your banking, your expenses, your bill pay, all silently running in the background. It keeps the books perfectly clean without anyone actively managing them. It's what allows a solo founder to maintain total financial control without needing to hire an entire finance department.
Which brings us to Section 3, Scaling to a Unicorn. Let's look at some real numbers. According to data tracked by Bessemer Venture Partners, the fastest scaling AI companies aren't just out here making lofty, pie-in-the-sky projections. They are aggressively hitting actual wild numbers. The top-tier companies are hitting $40 million in revenue by the end of year 1, and then scaling up to an incredible $125 million by year 2. And the craziest part? They're doing all this while maintaining more than $1 million in revenue per employee. That is the actual aggressive pace of the fastest companies operating right now. No joke.
Now, to really demystify what a billion-dollar valuation actually requires for an AI-native company, we have to look at something called the ARR multiple. Essentially, this is the financial metric that investors use to figure out exactly how much a high-growth business is worth based on its annual recurring revenue.
Right now, private market multiples for high-growth AI businesses are running significantly higher than your traditional software companies. In the public markets, you might see valuations sitting at, say, 6 to 10 times annual revenue. But in strong private funding rounds, AI companies are getting valued at 20 to 30 times their ARR. So let's do the math on that. At a 20 times multiple, an AI company only needs to hit $50 million in revenue to achieve that billion-dollar unicorn status. At the supernova pace we just looked at on the previous slide, they're clearing that hurdle easily by year 2. So that old math problem that used to block solo founders from reaching massive scale, it's officially gone.
Section 4, the human premium.
Okay, before we go declaring this the ultimate cheat code and assume just anyone can do this overnight, we need a quick reality check on the margins. Because getting to $1 billion isn't just about breakneck speed. The margin reality really matters. Bessemer's data shows that the fastest scaling AI companies are averaging around a 25% gross margin. Compare that to traditional software, which usually sits way up between 60 to 80%. That is a massive difference. It basically means that if your underlying business model isn't structured absolutely perfectly, the math simply falls apart as you grow. You literally cannot just scale a flawed model with AI and hope it magically works out. Furthermore, while AI is incredible, it handles the execution layer almost entirely. It builds what you ask, runs ops, generates content. It completely fails at the strategic layer. AI cannot tell you if the market you're chasing is actually the right one. It can't tell you if your pricing strategy is leaving a ton of money on the table, and it definitely can't make that gut-wrenching decision to pivot the entire company before the data makes it totally obvious. That kind of judgment, that is strictly human. High-stakes trust, enterprise sales, key partnerships, difficult investor conversations, all of these still absolutely require a human founder in the room. AI is the ultimate engine for sure, but you still have to steer the ship.
So while the execution barrier is pretty much obliterated, the strategy barrier absolutely remains. This means the very first one-person billion-dollar company is likely going to be in a category where margins and distribution already heavily favor them. Think pure digital products or viral, SEO-driven discovery. The timeline for this is shrinking fast, and as our source notes, the eventual winner of Sam Altman's betting pool probably won't even make a big splashy announcement about it. They'll just be a founder who built something really great, kept their team incredibly small, and quietly hit a number that makes this entire prediction feel totally obvious in hindsight. So I'm going to leave you with this final thought. With all these insane tools available literally right now, are you building with this new math today, or are you going to be the one waiting to read about it tomorrow?